What if you could bypass banks and credit card companies and finance all of your purchases privately with your own DIY financing system? What if you could access the money when you want it for whatever you want without jumping through hoops to get it? Yes, it is possible, and it's easier than you might think. Here's how it works. Let's say you want to take your family on vacation. You'll either pay for it with your credit card or you'll save up for it and pay cash. Well, after your awesome vacation, you'll have some great pictures and nice memories, but you'll also be stuck with credit card debt and a whopping 21% interest too. If you pay cash, you'll use up all the money you saved. And how much interest are you now earning on that money? None. And you'll only start earning interest as you gradually put the money back in your savings account, which, by the way, isn't earning much. In reality, you finance everything you buy. You either pay interest when you finance things, or you lose interest you could have earned if you'd kept the money invested instead of paying cash. So, what's the solution? Why not create your own vault of money that you can borrow from to pay for your vacations, your car, or whatever you want, while the money in your vault continues growing as though you never touched it? And how do you create this vault of money? You do it with a specially designed dividend-paying whole life insurance policy. It's not the kind those financial radio hosts like to criticize. In this kind of policy, a portion of your premium goes into a rider that supercharges the growth of the cash value in your policy. This kind of policy shrinks the advisor's commission and gives you up to 40 times more cash value than a traditional whole life policy. With the early cash value buildup, you'll be able to use it earlier to enhance your lifestyle, or even better, to invest in cash-flowing assets that pay for your lifestyle. You could do like Walt Disney, who borrowed from his life insurance policy in 1953 to build Disneyland, when all the banks refused to fund his billion-dollar idea. And then there's J.C. Penney. John Penney borrowed from his life insurance policy to pay his employees after the 1929 stock market crash. And yes, the insurance companies that create these kinds of policies survived the Great Depression and had the funds to keep people afloat in both the United States and Canada. But you don't have to be a rich business owner or creative entrepreneur to do this. Anyone can do it, no matter your income. Let's compare a bank loan with a DIY financing policy loan. If you want a loan from a bank, you'll need to apply and they'll check your credit score to see if you qualify. But with DIY financing, the insurance company is contractually bound to give you the loan based on the equity or cash value in your policy. A bank may charge you a higher interest if your credit score is weak, but with DIY financing, all borrowers get the same rate. When you borrow from a bank, who sets your repayment terms? The bank, of course. But with DIY financing, you set your own repayment terms. What happens if you miss a payment on a bank loan? Well, down goes your credit score. Miss more payments and you'll be hiding from the collections agency. But with a DIY financing loan, you can reduce or skip payments if you're in a financial bind and not lose sleep over it. Finally, when you die, your estate has to pay off your bank loan. But with DIY financing, unpaid loans are simply subtracted from the death benefit, which has grown so much over the years. Your family still gets a sizable sum and can repeat the same process to grow their own wealth exponentially. The best part is, you can use your policy as a retirement plan. Since the policy keeps on growing, you can borrow from it in your retirement years to supplement your income. And if you do it right, pay no taxes under current tax law. At Isura Financial, we can help you increase your family's lifetime wealth by hundreds of thousands of dollars with DIY financing. We'll structure your policy so the growth is maximized. We work with the few companies in Canada that offer policies with all the features needed to practice this powerful concept, so that you can use the money in your policy while your policy grows as if you never touched it. Many people procrastinate saving for the future because they are afraid to sacrifice their current lifestyle. You don't have to give up your lifestyle to save your money when you make DIY financing a way of life. So don't delay. Start DIY financing today.